Taking a look at today's interest rate markets, let's look at the 10-year note futures as they continue to move higher today. 10-year note futures trading higher for a third consecutive session, and today we're looking at the futures market trading up near contract highs, currently priced at 114 spot 26, just off the intraday highs, and that is the December future, which is now the most actively traded future, maintaining some upside price action here for three consecutive sessions. And the driving factors today appear to be data points this morning, labor data points headed into non-farm payrolls tomorrow, ADP private payrolls this morning coming in well below expectations, labor costs coming in below expectations. So those things I think are setting the tone for tomorrow's non-farm payrolls, contributing to some of the buying pressure today. Weekly jobless claims pretty much in line with expectations and then in line with where they have been the last several weeks. Now, we did have other data points this morning which showed a little more strength than expected, particularly service data points in ISM and PMI data coming a little stronger than anticipated in the service sector. But overall, it does appear the market's very much focused on the labor markets, as that is the Fed's measure here, as we're moving towards that Fed announcement here in 2 weeks. So I think that certainly is the catalyst today for why we're seeing higher price action in the Treasury markets. Now, looking at the yields, 10-year yield is lower by 4 basis points today to 373 basis points, which is the lowest levels from a yield standpoint going back to the end of June of 2023. So better than 1-year low yields here today in the 10-year construct. Also, I want to point out a lot of discussion here the last couple of days about the yield curve inversion between the 2-year and the 10-year. It came out of inversion yesterday briefly, back in inversion today, where we're seeing a little bit extensive buying pressure on the back end of the curve, not so much on the front end of the curve. The yield curve is moving lower pretty much across the entire curve. However, the front end is down less than the back end. So therefore, we are seeing 2 points of inversion back in that 2-year, 10-year yield curve today. But overall, higher price action. Looking at non-farm payroll reaction tomorrow, markets highly anticipating that, and we're seeing yields continue to move lower.